What if I told you that the banking system is sitting on a financial time bomb? Just 2 years after the collapse of several major banks, a new crisis is brewing beneath the surface. It involves shocking levels of unrealized losses and a commercial real estate market on the brink. Are you prepared for what's coming? Welcome back to the channel. Today, we're diving into a topic that's been flying under the radar but could have massive implications for the economy and your money: the brewing banking crisis of 2023. We'll explore how recent changes in interest rates and commercial real estate values have left banks in a precarious situation. We'll see why small regional banks are particularly vulnerable and what this could mean for the broader financial system. Plus, we'll cover practical steps you can take to protect yourself in these uncertain times. In this video, you'll learn about the role of fractional reserve banking in the current crisis, how commercial real estate loans are creating vulnerabilities, and why regional banks might be at risk. We'll also discuss the potential for more cockroaches to emerge as warned by industry leaders like JP Morgan's CEO. Stay tuned for insights on how you can secure your assets and minimize your exposure to this developing situation. The current situation in the banking sector is concerning, with echoes of past financial crises resonating through the market. We're witnessing what could be the beginnings of a new banking crisis, not limited just to banks, but involving the entire financial system. The importance of understanding the underlying issues and their implications cannot be overstated. To start with, let's dive into the original banking crisis to set the stage for what's happening now. At the core of the banking system is fractional reserve banking, which allows banks to keep only a fraction of deposits on hand while lending out the rest. This system works well until there's a loss of confidence, leading to mass withdrawals and liquidity issues. A significant contributor to the current risk in the financial sector is the massive amount of unrealized losses tied up in commercial real estate. Banks have invested heavily in this sector during periods of low interest rates, only to encounter plummeting property values as rates rose. These commercial loans, unlike fixed-rate home mortgages, adjust after a few years, leaving banks and borrowers vulnerable as they face refinancing at much higher interest rates. Smaller regional banks, which were not considered too big to fail, are particularly exposed, holding vast amounts of these potentially declining assets. This exposure has put smaller banks in a precarious position. Recent incidents, such as Zions Bank's significant charge-off due to borrower fraud, have reignited fears of a broader banking contagion. Such concerns echo the warning from JP Morgan's CEO, Jamie Dimon, suggesting that when issues become apparent, they might only be the tip of the iceberg. Although stronger regulations were put in place following the 2008 financial crisis to curb risky lending, circumventions have occurred, leading to an expansion of potentially hazardous loans. Yet, despite these risks, it's crucial to note that large national banks have been reinforced to withstand potential losses, unlike their smaller counterparts. For individuals concerned about their financial standing, the key takeaway is not to panic but to remain informed. Diversifying one's bank accounts and staying aware of the financial health of banking institutions can provide peace of mind. While the current situation highlights vulnerabilities in the financial system, Congress and regulatory bodies are aware and are taking measures, such as proposing increased insurance limits to protect customers. Understanding these developments, maintaining diversified financial strategies, and keeping an eye on the larger economic picture can help navigate through this uncertain financial landscape. To recap, we're witnessing a banking crisis that's reminiscent of 2008, fueled by unrealized losses and a shaky commercial real estate market. While large banks appear more stable, smaller regional banks are exposed to significant risk. As interest rates fluctuate, these vulnerabilities could become more pronounced. It's important to understand the factors at play and take proactive steps to safeguard your financial well-being. What do you think about the current state of the banking system? Do you feel secure with your current bank, or are you considering diversifying your accounts? Let me know in the comments below. If you found this video helpful, please hit the like button and subscribe for more insights on navigating today's financial landscape. Remember, it's always better to be prepared than caught off guard.